Hello, it's a lovely good morning and a very chilling one from Delhi, and hope each one of you as always are absolutely fine. So now after having acclimatizing ourselves with all the conceptualities of India's 103, that is business combination, and after getting ourselves familiarized with various terms which we will of course come across and we will keep on what we are talking about during the entire length and breadth of this particular chapter, we are moving over to the first segment, and we will see just in a short while that we have divided our entire module into 20 sections, and each section covers a particular type of what we call problem or case study. So under these 20 sections, we are going to cover this lengthy, formidable, and a highly important and high voltage chapter. So we are now in this particular segment going to have a look how the calculation of goodwill or non-controlling interest or gain on bargain purchase is done, and in order to comprehend ourselves with what we call with this particular segment, here we go. So right on your screen what you are having a look at division 1. In fact, these are the module which I have extracted from my book actually, which is published from Bharat Law House, Financial Reporting Made Easy. So these notes are also with you, and these notes comprises of nearly 80 pages. This particular chapter, business combination, we have taken up nearly 80 pages, correct? So more than 100 questions have been incorporated in it. Of course, as I have already told you, it's a formidable chapter, very significant one at the same time, and in the examination, in my view, you can have at least two questions, one is smaller and one a lengthy one. Besides that, you shouldn't be surprised even if the third one would get tossed up in the examination from some case studies. So there are 20 sections all in all, and we are now, as I said just a moment ago, moving over to the first section. And the first section, as you can see, deals with, here I go, let me have a look over also whether I'm having the right notes or not. Yes, open down page number 10, and in the page number 10 you will find part 1. Part 1 means section 1, and this particular section deals with calculation of goodwill, non-controlling interest, and gain on bargain purchase. In this particular section, problems related to calculation of goodwill, non-controlling interest, and of course gain on bargain purchase have been incorporated. Near about 14 problems with respect to this particular section only are there. So one by one we'll pick them up and we'll try to acquaint yourself also how to compute these terms and compute in a manner which is not only easy but smooth also. So here we go, take up the first case. So open down your material, page number 10, and this is your part 1, correct? So in this particular session we are going to, as I said, start in real sense this particular chapter. So part 1, this is 1.1. 1.1 signifies 1 stands for section and 0.1 stands for the first question. 1.1, FX Limited acquires 100% of MX Limited for 9,60,000. Now FX, needless to add that it is the acquirer, and it is this time acquiring 100% of MX Limited for 9,60,000. 9,60,000 is the amount of consideration it means, isn't it? So you should be in a position to analyze these things. And fair value of these net assets means assets less liabilities, at the time of acquisition amounted to 8 lakhs. So total net assets of the acquiring company were 8 lakhs, and we are supposed to actually calculate goodwill and of course pass the entry in the books of A Limited. I have already told you basically India's 103 stresses the perspective of the acquirer company, correct? So I will keep these pages, in fact I will keep it over here because I shall be needing these pages time and again, correct? So we start this particular topic now. Let me pick up the red pen first. And the name of the topic you are already aware of, section 1 or part 1, whatever you may like to write. I will write section 1, correct? You have to write, and you will have to write a lot today. Section 1. Section 1, as I've already told you, deals with calculation of goodwill, non-controlling interest, goodwill, non-controlling interest. Once I will write in full form, non-controlling interest. It's pretty chilly out here in Delhi today. non-controlling interest. So fingers are not yet warmed up, correct? So it will take a bit of time. Non-controlling interest, NCI we would call it henceforth, and gain on bargain purchase. Gain on bargain purchase is just opposite of goodwill. Gain on bargain purchase. Gain on bargain purchase. This is the term we will have to use instead of capital reserve. Gain on bargain purchase. Because it's a pretty long word, so I will simply write GOBP in case if I would require it to write when I will solve the question, correct? Gain on bargain purchase. So here we go, 1.1 we shall start now, and 1.1 is the question which we are taking up. We have already seen the question, but still, as is my habit also, and you are also acclimatized to it now, so I will analyze the question first of all, although it's a very simple elementary sort of question, correct? You have already gone through the question. There is an entity by the name of FX Limited, and FX Limited has acquired 100% stakes, 100% stakes in, 100% stakes in which company? Let me have a look. MX Limited, correct? MX Limited. Just wait. MX Limited. Suppose if I would ask you, could you tell me which is the company which is acquirer and which is the company which would be termed as acquiree? FX Limited is acquirer, needless to add here. FX is the acquirer company and MX Limited is acquiree, isn't it? FX is acquirer and MX is acquiree company, but these are the terms we are using from the perspective of law, that is, they are legal acquirer and acquiree. When we were discussing the theoretical aspect in the initial stages of this particular what we call chapter or Ind AS, we talked about this particular fact under the accounting aspects, that we need to actually know the accounting acquirer and the acquiree. Although it's a very small faceted question, here we need not require to stretch our levels of mind to find out who is accounting acquirer and who hasn't, because it's a straightforward question, because recognition of or identification of accounting acquirer and acquiree generally will be dealt up when we will take up the what we call questions related to the case studies. Here it is very simple because no further information is given. To be very honest with you, whenever you are going to face a straightforward question, in such questions you need not require to stretch what we call your imaginations to vagabond limits. Simply, the legal acquirer will be considered as an accounting acquirer because we haven't been given any further information. We have been given simple information that FX Limited has acquired 100% shares. So here, one can easily what we call conclude that FX Limited is also the accounting acquirer. But I am stressing upon all these facets just to actually recapitulate the things which we have already done. So, we need to understand that FX is the accounting acquirer also, accounting acquirer. FX is the accounting acquirer, and of course MX Limited is the accounting acquiree, correct? As far as some straightforward questions are concerned, there on generally, and I have already told you, 99.99% legal acquirer will be the accounting acquirer. However, on the case study, there might be some situations wherein we need to actually apply and think a lot before we conclude who happens to be the accounting acquirer. Now, further, we need to know that Ind AS will come into play when only there will be a business and transaction will be a business combination, isn't it? We have already seen these terms. Just to remind you of those, we are presuming that this transaction is a business term. We are presuming that MX Limited is a business from the perspective of FX Limited. It means we are concluding that when FX Limited is acquiring MX Limited constitutes a business. I've already told you what exactly the business is. It means that we are presuming that FX Limited has got the assets and liabilities which are an integrated set, and they can be conducted, they can be managed, and some output can be produced and some economic benefits can be reaped in, correct? And this transaction is a business combination. This transaction will become business combination only when the acquiree will confirm the definition of the business. So, although it's a small question, we are simply need to actually compute the goodwill, but just I am explaining all these points to remind you of the things which we have already done so that we can retain them for a longer period of time. Business transaction. We are presuming this entire event or transaction is a business transaction, or business combination should I write? Business combination. It's chilly out here, I have already told you, so it takes a bit of time to get warmed up, correct? Business combination, just to remind the things. However, in this particular question, we are supposed to compute the goodwill. In order to compute the goodwill, what we are supposed to do? It is very simple. You need not require to actually put up some extra effort. Simply think this way. You are investing in MX Limited. Needless to add, you are investor, you are acquirer. You have acquired 100% stake, so in this question, there cannot be any question of non-controlling interest holder because entire stakes of MX Limited now lie in your hands, isn't it? So, in order to compute the goodwill, what I am going to do? First of all, I am going to presume myself as the acquirer, correct? So, from the perspective of the acquirer, we are thinking and analyzing the things. We have invested, and for the same, we have paid an amount equal to 9,60,000. We need to understand that also. In this question, 960, right? So 9,60,000 is the amount which we have paid. It is also given in the question, correct? 9,60,000. Besides, it is also given when you acquired this particular entity, the net assets of MX Limited, net assets of MX Limited, net assets of MX Limited, in the question it is given 8 lakh, were commanding a fair value of 8 lakhs. Correct? This is the situation. Now, in order to compute the goodwill, what I need to know? First of all, I need to know actually the fair value of net assets of acquiry. The fair value of net assets of acquiry happens to be 8 lakhs. So first step is, note down very carefully, 100% identifiable asset. Should I write IFA? Okay, IFA, 100% of net identifiable asset, correct? IFA, I have used the short form. You need not require to write the word 100%, just to stretch and hammer it into your mind that you have to be careful that you have to write the 100% value, correct? So 8 lakh are the total net asset. Total net assets means assets minus liability. So fair value is 8 lakhs. So you note down 8 lakhs. Since you have acquired 100% control, you have acquired the 100% business of MX Limited. That means you have the control over this 8 lakh now. Put it in more simple words. Now this entire 8 lakh worth of net assets belongs to you. Why? Because you invested what we call in this particular company and you acquired 100% of what we call this particular company. Now, after this, you compare it with the consideration which you have paid. Consideration. In this case, you are paying a consideration of rupees 9,60,000, isn't it? You are paying 9,60,000. In order to acquire this particular entity, you paid a consideration and the fair value of the consideration is 960. Remember, you have to take care of the fair values. This is what the standard stresses upon, correct? 9,60,000. Generally, under step B, we also write A, consideration, B, non-controlling interest. But in this question, there is no non-controlling interest. In this question, there is no non-controlling interest. Correct? Now you compare this 8 lakh with this total amount. In this question, there is no non-controlling interest. So total of B is 960 and total of A is 8 lakhs. Correct? Obviously, you are getting less in terms of net assets 8 lakh by paying 9 lakh 60. Because the amount paid exceeds in comparison to what you are getting, quite obviously it's a loss to you. Because it is a loss to you, it is considered as a capital loss, it is considered as a what we call goodwill. So in this case, the net resultant figure which we are going to get is, because B is greater than A, B is greater than A, that means this part, the payment part, exceeds what you are receiving. So that is why it is a loss to you. That is why it will be considered as a case of goodwill. So in this case, the resultant figure will be your goodwill, and goodwill will be equal to 1,60,000. I need not require to tell that. 1,60,000 will be considered as goodwill. Is it clear to you or not? Quite simple, I think, not very tough to comprehend. And now, question has also asked, this is calculation of goodwill, step number A, calculation of goodwill. So in order to compute the goodwill, what we need to do, we need to compare the 100% of the net identifiable asset with the amount of payment towards, when we say consideration, that means consideration we are paying, and non-controlling interest is basically a liability. We will talk about it in the next question also. Correct? Now I will have to pass an entry. I will pass the entry this way around. Entry. Net identifiable asset. Net identifiable asset, NIFA. Net identifiable asset, you can use the long form also, 8 lakhs. Then you write here 2. Because in this question nothing is mentioned whether you are paying the consideration by issue of shares or cash, so form of payment is not given, so we are presuming that we are making the payment in cash. So I am simply writing here 2 cash, or you can simply write here 2 consideration. So 9,60,000 is the amount which you are paying, and we are presuming that we are paying it by way of cash. I can also write share capital, because nothing is mentioned in this question whether we are making the payment through issue of shares or cash, because it is our prerogative, or it depends upon the agreement. Consideration could be in any form. We have already seen that. Correct? And generally we write here 2 non-controlling interest also, but non-controlling interest in this question is absent. Now the difference obviously will be your goodwill, which we have already computed. This journal entry is nothing but it is a culmination of the things which we have done so far, isn't it? 1,60,000. So this will be the situation in the books of what we call A Limited. Quite simple, isn't it? Not a very tough thing to actually crack, neither it is very difficult to comprehend. I'm very sure about that. So I will keep the sheet over here. Correct? Lots of sheets are there. So now we pick up next point. Next question. This was case study 1.1. Now where is the 1.2? Here it is. Lots of sheets are there. 1.2 case study now we are picking up. Correct? In this question, it is given to you that on 31st of March 2019, K9 Limited acquired L5 Limited. K Limited issued 60,000 equity share. Pay attention, this time payment is being made by way of equity share. K9 Limited is the company which is acquiring L5 Limited. K Limited is issuing 60,000 equity shares of rupees 10 each, having a par value, and that were trading at rupees 240. But their fair value, you can say that way, is 240 on 31st of March. Remember one thing, while what we call solving the question, we have to take care of the effect of the fair values. The book value of L5's net asset is 72 lakh on 31st of March, We are not concerned with the book value. So this particular information has been given just to tilt or just to confuse what we call ourselves. The fair value of the net asset was assessed as 135 lakhs. Book value is 72, but their fair value is 135 lakh, and that's the thing we should be more concerned of with. Is it clear to you? So once again, in this particular question, we are supposed to actually compute the amount of goodwill. So how to compute the amount of goodwill, that I will let you know. And so here we go. 1.2 is the question. Now we are going to pick up 1.2. Where is the red pen? And you know that how much I am concerned with the red pen, but where it has gone. No, it is not red pen. Again, it is not a red pen. Red pen is lost out. That's a big problem. Anyway, you might be wondering why I am so fond of red pens. 1.2. This is the question. Obviously, because we are picking up the question, and it could be a possibility that some of the student they will have to keep the sheet in front of them to understand the question. So even if you are finding it pretty difficult, just have a look over here, because I have a habit of analyzing the entire question. Correct? So here we go. In this question, we have been given that K9 is an entity. Question is lying towards my left hand side. I will have to look over into the sheet. Yes, K9 Limited. K9 Limited is the company. Then there is another company, L5 Limited. Quite obviously, we have come to the conclusion now this is acquirer. Needless to add that L5 is acquiree. Not only legal acquirer, but accounting acquirer and accounting acquiree. Correct? Because under straightforward questions, no further information is given to us. So we are left up with only one symptom, that who is the investor. That particular company is termed as legal acquirer, and that will also become the accounting acquirer in the absence of any further information. Correct? This is the situation. And it is given that, just wait. Acquired L5 Limited issued 60,000 equity shares of rupees 10 each at par. We are issuing actually this time how many shares? We are first of all, K Limited acquired L5 Limited. K Limited issued 60,000 equity shares of 10 each that were trading at 240. If suppose in this question I would ask you, suppose in this question if I would ask you what is the amount of consideration? What will be your take? How many shares you are issuing? You are issuing 60,000 shares, isn't it? You are issuing 60,000 shares. And these shares, although are having a face value of rupees 10, but we are concerned with their market value, their fair value. And we have been given in this question that their fair value is 240. 240 is their market value. Now, if I happen to multiply 60,000 with 240, how much it will be equal to? It will be equal to something 144. How many zeros are there? 50. I think I'm correct. Something 144 lakhs. 144 lakhs. Is it clear to you or not? So this will be considered as what we call our consideration. Further, we need to understand in this particular question also, we have been given that acquiring companies, as far as net assets are concerned, it is given that net assets they are having a book value of 72 lakhs. They are having a book value of 72 lakh, but it's an irrelevant information. I've already told you we are concerned with their fair value. Now, fair value is given to us as 135 lakhs. This is the value which we are more concerned of with, isn't it? So, this is the situation in this particular case. Also, in this particular question, it is not given actually that how many shares you acquired. how many stakes you acquired. It is simply given that K9 acquired L5 Limited. So you will presume that you have acquired 100% shares. Is it clear to you or not? Because nothing is mentioned in this question how many stakes or what proportion of stakes you acquired. If nothing would be mentioned in the question, you will be left up with only one alternative, that is to think that you have acquired 100% stakes of the what we call acquiring company. So it means again in this particular question, non-controlling interests are absent, correct? So now, we shall compute the amount of goodwill first of all. In order to compute goodwill, what I need to do? As I said just a moment ago, first of all, we need to note down very coolly the total value of identifiable assets, of course, fair value. So I will write here A, 100% of fair value of net identifiable asset, NIFA, 100% of fair value of net identifiable assets of acquiring company, which happens to be 135 lakhs. 135 lakhs. It is given to you in this particular question, isn't it or not? After having noted it down very coolly, now under B, 1, take the amount of consideration. What is the amount of consideration in this case? Consideration. Amount of consideration we have already computed, 144 lakh. Besides, we also write under B, amount of non-controlling interest. However, again in this question there are no non-controlling interest. So you compare A with the total of B. Obviously the total of B, which reflects the payment part, is more. So once again the resultant amount will be goodwill. So your goodwill, because B exceeds A, correct? Just sorry for a moment. Just wait. Amount of goodwill now we are going to compute. Amount of goodwill will be equal to how much? It will be equal to 9 lakhs. Correct? Then we will pass the entry as we did in the last question. It is very simple to pass the entry. Simply note down identifiable asset, net identifiable asset account debit, 135 lakhs. Then you write this time capital, because you are issuing consideration. In order to pay the amount of consideration, in fact you are issuing capital. This is reflected in the question. So it is better to write capital instead of cash. Or simply you can write consideration. But when you will write capital, you will write this way. That is 60,000 shares into 10. Fair value, face value 6 lakhs. The share of 10 has been issued at a price of 240. So 230, the difference will be premium. You will write here security premium. That is 60,000 into 230. 240 minus 10. That will be equal to 138 lakhs. And generally we write here non-controlling interest also, but in this question there are no non-controlling interest. So difference will also be reflected through entry, and this difference will be termed as goodwill. That is 9 lakhs. So not very difficult to understand this particular question. and neither was the first one. Correct? So these two questions are of elementary nature. In the next session, we'll meet you and we'll still continue with this particular topic, but we'll take questions now wherein we will have non-controlling interest also.